Good afternoon, everyone. It's Sean Sandilands from Pulse Markets here again. I've got John Forward from the Lowell Funds Management with me this afternoon. We're a big fan of John's. We've been watching his success over the last couple of years, especially through COVID. He performed very well. We'd just like to get an update of what's going on in the micro-cap resource sectors. And for those who don't know who John and the Will are, for the first time you're seeing this, I'll get John to give a bit of an intro about what he's about and what the fund does. And then I've got some questions just that I think are quite prudent in the current market. So hi, John, how are you?
Hi, Sean, I'm very well, thanks. Great to be on again with you. Thank you for those very kind words. It's really enjoyable to be chatting again with you.
That's really great, John. It was nice seeing you in Melbourne last week. It was the first time I've been able to travel in a while, so it's good to catch up. But can you just give us a quick rundown on the Will, as I said, just so our investors and other brokers can get to know a little bit more about what you're after?
Oh, sure, I'd love to do that. So Lowell Resources Trust, it's listed on the ASX. We listed it in early 2018, but it has a much longer history than that. The funds management company's been running it since 2004, built it up from only a couple of $1 million under management to currently we're just shy of about 60 million Aussie dollars of FUM. We've had a great couple of years in terms of performance. The last 12 months or to the 31st of October this year, we've done 40%. And over the last 24 months, we've done 80%, and that's per annum. So we have, as you said, we've had a really good run through COVID. Yeah, look, you know, we're a unit trust, which means that we have to distribute all our taxable profits, and you know, we're trading at a slight discount in terms of our ASX traded price, which is about $1.80, compared to our current NAV, which is about a bit over $1.90.
Okay, that's great. I just want to clarify one thing there. Did you say 80% per annum?
Over the last 2 years, we've done 80% per annum. So yeah, we're very proud of that performance. Look, it has been, you know, we've been lucky with the market. You know, we are focused, as you mentioned, on the micro cap resources sector. So you know, across the commodity spectrum, from you know, precious metals through to energy and oil and gas, we look at pretty much everything. Most of our investments are listed on the ASX, but there's a number that are seed investments that are, you know, not available to the man in the street, I guess. And then we have a few that are listed offshore, mainly on the Toronto Stock Exchange.
Okay, that's really intriguing. Congratulations again. Listen, that type of return is phenomenal. Can you just go into what are some of the stocks in your portfolio at the moment where you think or you're hoping to get those returns again?
Look, just you know, digging down a bit more granular into the portfolio. So the biggest holdings currently are ASX listed gold stocks. I won't go through them all, but currently our largest holding is a company called Musgrave Minerals, which makes up about 7%, maybe a bit more of the portfolio. And that's you know, we generally look at taking a reasonable amount of risk in terms of, you know, the geology and what the potential might be for an individual project. And Musgrave, it's certainly got the gold in the ground. It's got some really good high grade gold in the ground, which looks like it'll be very, very high margin to produce. But the exploration potential is also really exciting. So that's just a typical investment that we make. Other commodities where we've got a reasonable amount of exposure, things like nickel. We've got a couple of nickel stocks in our top 10 holdings. Azure Minerals, which we might talk about a bit later, and Talon Metals, which is is a Canadian company, both with relatively advanced nickel projects, one in the US and one in Western Australia. So as I say, I won't go through all the stocks, but that gives you a bit of a flavour for what we're holding.
Okay, I guess being a manager, you're looking at the overall market in general, in particular with the resource market where you're focused. Can you give us a little bit of an insight into inflation? We've noticed this year in the markets there's been a lot of capital raisings, and one thing I've noticed is driving around, the cost of fuel has gone through the roof. So can you just give us a bit of an update of what you think of that, please?
Yeah, look, I guess, that's one of the really big themes, not just in the resources sector, but in the economy in general. Is inflation transitory, or is it going to stick around for the longer term? Look, we certainly think that in the near term we'll see we are seeing high inflation, and it probably will go higher into early next year. And beyond that, we think there's a reasonable chance that we'll see higher than normal inflation over the medium term. Yeah, look, absolutely. And one of the things that's perhaps one of the big things that's driving that inflation is energy. The energy prices, in particular, global gas prices have absolutely skyrocketed. We're seeing prices for Australian export LNG go from $10 or $12 a gigajoule, which is the normal unit, up to rumored there's some cargoes that have been going for $50 a gigajoule. And while Australia has got a lot of a domestic gas, and we're somewhat insulated from those international prices, that the cost of energy is pushing up the cost of pretty much everything globally, and we're seeing that here in Australia. And I guess in particular, we're in a small sense, we're really interested in inflation because of its impact on the gold price, and we're about 50% invested in stocks which are exposed to the gold price. If you've got high inflation and low interest rates, or central banks that are lagging in playing catch up with high inflation, then you're going to see low real interest rates, which is inflation minus nominal interest rates. Nominal interest rates minus inflation. Generally, when you see really low real interest rates, that's really good for the gold price. And we've seen that recently. Real interest rates in the US are trading at around -1%. And the gold price has been starting to move up over the last, just a week or so. So we think, at least through to, early next year, and seasonally, gold is strong in December, January, February. It's something that you often see, that the gold price strengthens during that period. We think we could have a very strong run through to, through the first quarter next year in terms of gold.
So that brought me to my next question. I think you've just answered it there. I've noticed the gold price has been running too. We've been picking up some derivatives over Newcrest at the moment. You're obviously in that smaller end. You just said that you think the gold price could run the next quarter. Do you think it could go even further after that? Or?
It is hard to see, inflation coming back to, the low levels. We've had decades of basically low inflation. The factors that will push it, that we think are going to push higher inflation are higher energy costs, and there's been a decade of under investment in energy. I'm talking about the more traditional energy sources and fossil fuels. Added to that, you're seeing the cost of the transition to the decarbonised economy, and that's going to be hugely expensive as well. So you'll have two factors which will push inflation up, and I think central banks are really almost got their hands tied that if they start to move with the amount of debt in the system, particularly government debt in the system, if interest rates start to move up, that's going to be a really, really nasty shock to the economy. I can't see Jerome Powell wanting to smash the US economy by, pushing interest rates up too far. So, if all of those factors come to play, then the gold price could really move up well north of $2,000 US an ounce.
Okay, that's really interesting. With other commodities, is there any others? You've mentioned electric vehicles, not electric vehicles, but you've mentioned the transition to. What about copper? That's a commodity which we've been looking at the moment. Have they got enough supply for the future? Is there anything you can see there that where you're investing at this particular point in time?
Yeah, look, we're not alone in really liking the fundamentals for copper. And right now, I saw a quote, "Copper is the new toilet paper." You remember last year when everyone was rushing out to the supermarket and hoarding toilet paper. People are hoarding copper. Well, traders are hoarding copper, I should say. And stockpiles are at their lowest level. Stockpiles of copper are at their lowest levels for 40 years. And some, respected research houses are calling visible stockpiles to be completely depleted by early next year of copper. So one of the factors there, and I've mentioned underinvestment in traditional fossil fuel energy sources, but also across the commodity spectrum, there's been falling investment, and that includes copper. So there's an interesting stat that of the 10 largest copper mines in the world, most of them have got reduced production when you compare it to 10 years ago. Now, higher copper prices, and the copper price is definitely strong at the moment, trading at around $4.40 US a pound. And that should stimulate additional production to come into the system. But there's no question that the existing big mines, their production is falling over the longer term, and it's much harder to get new mines permitted. In particular, we've seen Joe Biden basically kibosh two of the biggest copper developments in the US, one's in Alaska, one's in mainland US, which would have helped alleviate that to a small extent. So the fundamentals, without even talking about the demand for electric vehicles and electrification and wind turbines and the huge requirements for copper in the forecast, the supply side is looking really, really tight.
Okay, great. We did touch on energy and oil and gas previously. Is that interlinked with the whole switch to electric vehicles? Can you see there's not enough investment there for the future at the moment?
We're certainly in a transition period, but the hard-headed realists. Now we generally don't invest in coal or iron ore, only because the capital requirements of those sort of projects and the infrastructure required are too large for the juniors, the micro caps that we usually invest in. But the hard-headed realists are saying, look, okay, it's going to take a long, long time to phase out coal, for example. It's also going to take a very long time to phase out other fossil fuels, and they never will be phased out because petroleum products don't just go into CO2 emitting vehicles. There's thousands of uses, in terms of plastics, in terms of lubricants, all that sort of stuff that fossil fuels are required for. So we're going to see them for a very, very long time. But what's happened, once again, in the underinvestment, it was particularly exacerbated by COVID. You might remember that the oil price in, I think it was May 2020, went negative.
Yes, I do.
That was because everyone was still, producing at a relatively usual level, and the demand had fallen off a cliff. And so storage, there just wasn't any storage for this oil that was being produced. So people just didn't want to take any oil, and they were paying people not to take it. But the result of that was that drilling activity globally, but particularly in the US in the shale oil space, fell off a cliff, and it just hasn't recovered since then. On the other hand, demand has surged back much faster than most pundits predicted. So we're seeing, $80 a barrel oil at the moment, and some commentators are saying it's going to go well north of $100 a barrel. Now that may well happen, but I think what we'll see over the longer term is just increased volatility. These energy crises happening as we move from more fossil fuel-based baseload supply to renewable. We'll try and move towards renewable baseload supply. We're going to see these crises break out where the system breaks down. There's not enough conventional fuel available, and we'll have spikes in demand. So there's going to be periods where the oil price, the gas price, as we're seeing at the moment, really spike up, and those producers make fantastic margins.
Okay, thanks for that. One thing I think a lot of people watching would want to know, what do you think favourite stocks? I mean, at Lowell, it's not just you who is managing the portfolio. You've got a team of analysts that dedicate hours and hours, days, weeks, months worth of time into researching stocks, which is ultimately how you get your performance. But I guess people are watching, they do their own research, but obviously investing in the Lowell, either via the ASX at the moment, buying it at a discount to the NTA. I guess people would like to hear what three stocks can you talk about today that you think potentially are interesting at this particular point in time?
Sure. Well, look, we certainly do have the luxury, if you can call it that, of just being completely dedicated to the sector and passionate about it. We're sort of resource nerds, if you like, and we've got a very experienced team of guys who do the help with the stock picking. So we do have quite a broad portfolio, but I've got three that would like to perhaps talk to quickly. The first one is an oil and gas company, which is called FAR, F-A-R, FAR Limited. I think it used to be called First Australian Resources, but now it's just called FAR. And they are very experienced explorers off the coast, offshore West Africa. They were involved in making a discovery offshore Senegal about 5 or 6 years ago, which ended up being bought out. Their share got bought out by Woodside. And they've moved along strike, geological term, but basically the same geological formations, but across the international boundary into the offshore jurisdiction of a country called the Gambia. And they've got a 1 billion barrel potential target there, which has just the drill rig has arrived, and they've just spudded the well targeting that 1 billion barrel field, which is in a number of different horizons. But the metrics in terms of valuation for FAR are really interesting. It's got a market cap of, I think, about 75 million. It's at the end of the well, assuming it's on budget, they'll still have about $56 million in cash. They've got the potential for another $70-odd million of contingent payments from that asset they sold to Woodside in their previous discovery. If the oil price stays above, I think it's $53 a barrel. Now currently it's around $80 a barrel. So it's looking quite promising that they'll receive that 70-odd million from Woodside. So even if they drill a duster in this current well, which is going down, and the results should be known in about mid-December, hopefully. Even though they drill a duster, there's potential that the share price will go up based on just purely the cash backing. But if they do, and if they do discover up to 1 billion barrels with this, and that's an enormous field. If they discover up to 1 billion barrels, you know, conservatively, that might be worth $2 or $3 a barrel to them. They've farmed out 50% of that project. So call it $2 a barrel for 500 million barrels. That's $1 billion worth of value to FAR. So downside, we think, is pretty limited by the cash in that company, and upside is easily a 10 bagger. So that's the sort of thing that we really like. You know, we do take a lot of risk, and the geological risk in that drilling is about, the chance of success is about 30%, as estimated by the expert oil and gas geologists. So we're taking a substantial amount of risk, but we think the asymmetric nature of the downside versus the upside is really attractive.
They've also got a history of returning funds to shareholders, don't they?
Exactly. I think they've just made an $80 million capital return, which is the result of the selling their original discovery to Woodside.
So they do like rewarding shareholders. That I've already written that one down. Do you have another one for us today?
Yeah, I thought I'd mention a couple in the metals space. So mention one in gold, and then the final one in nickel and gold. But the gold stock one of the gold stocks we've been buying recently is called Matador Mining, MZZ, also an ASX listed stock. It's got a market cap, similar, about $80 million market cap. It's an explorer. It's well funded. It's got about $17 million of cash, and it's exploring in Newfoundland in Canada, in the Maritimes in Canada. And currently, it's already got a substantial resource of about 800,000 ounces at 2 grams, which is a pretty handsome grade. And that's only on a small portion of their license, which covers, I think, a prospective shear zone of about 120, which is about 120 kilometers long. Now, the interesting thing about that shear zone is you're in Canada. There's a lot of glacial till, which is just moraine, which from old glaciers, which covers the bedrock. And there's been very, very little exploration to try and penetrate through that glacial till, which is about 5 meters thick. But Matador have got, I think it's 4 or 5 auger rigs out there at the moment, poking holes through this glacial till along that some of that 120 kilometers of prospective strike. And they've got some bigger drill rigs drilling off to extend the known resources. So we really like, Newfoundland is host to actually some really substantial deposits. There's some elephant deposits there, up to 5 million ounces. So we think they're a good team in the right environment to find another elephant-sized deposit.
So again, you've said the good team, historical success.
Yep, historical success, and they've got. If you don't drill, you're not going to find more gold deposits. So they've got a big drilling program going on. So the Northern Summer's just coming to an end. There'll be a hiatus, and then hopefully there'll be enough cold weather that it'll all completely freeze over, and then they'll be able to start drilling again, doing winter ice drilling. It actually makes getting around. It's a hell of a lot colder, but it makes getting around a lot easier if everything's completely frozen. So they've got a really big drill program going on, both regionally and targeting the existing resources. So we're expecting to see hoping to see some pretty exciting results come out of Matador, over the next 6 months.
Okay, fantastic. And last but not least.
Yeah, last but not least, by any means, another exciting one that we have been buying recently is a company called Azure Minerals, AZS, listed on the ASX. And their main game is up in the Pilbara in Western Australia, where they've got a joint venture with the famed prospector Mark Creasy. Azure's got 60% of a nickel project called Andover, which is just outside the little town of Roebourne in the Pilbara, very close to the coast, where they've been getting some really high-grade nickel results from drilling geophysical anomalies. Now they've got probably the best part of 9 or 10 really interesting geophysical anomalies to drill. They've only drilled the first couple. Looks like they're going to be turning up a substantial resource, nickel resource on the first couple of these anomalies. But the anomalies that they haven't drilled, and they're about to start drilling some of these other 9 or 10 anomalies. They haven't drilled them because they haven't had traditional owner heritage clearance to date. They've just received that, and they're just about to start drilling some of these additional anomalies, and some of them are enormous. So who knows? They might be due to something that's not nickel sulfides, but if it is, they'll some of these anomalies will be absolutely world class. The company's run by one of the former prospectors of the year, a guy called Tony Rivera, they're got I think they've got at least a couple of rigs drilling away there. So the nickel project is really interesting, but in addition to that, they've managed to acquire some ground down near Kalgoorlie in the WA goldfields, which is basically very close along strike with exciting new discovery by a company called Genesis Minerals, who we actually, by the way, happen to have a substantial holding in. Looks like that the discovery by Genesis, which is called Puzzle North, trends straight into Azure's 100% owned exploration license. So Azure, that's called Barton, and Azure are about to start drilling that target. I think they may have even just started. So a really nice little bonus in terms of gold prospectivity for Azure.
Okay, thanks, John. That's really exciting. One last thing I'd like to ask you personally, because I know a lot of my audience are certainly very interested in this at the moment. We've got positions in Leigh Creek Energy. The fertiliser price, or urea, it's been going up substantially over the last 12 months. Can you give us any colour of what you think of that commodity at the moment, please?
Yeah, definitely. Well, we were talking about energy a little bit earlier, and urea, you can't make it without natural gas, and so the gas price has been skyrocketing, and consequently the price for urea fertilizer has been absolutely skyrocketing as well. So obviously the great thing about Leigh Creek, and I was lucky enough to have a bit of a briefing from those guys this week, is that they've got access to their own gas. That there's no shortage of feedstock for them, and it all comes, it's basically free. Well, the cost of producing it will be about, I think they're looking at about $1 a gigajoule.
Yeah, $1 a gigajoule.
Their competitors are, going to be paying, if there were any competitors in Australia, and we're about to see the last one close its doors, are paying at least $8 a gigajoule, and probably a bit more. And internationally, I quoted those prices earlier. They're probably paying, more than double that potentially. So Leigh Creek have got a lot of natural advantages in terms of their feedstock, and they've also got some really nice advantages in terms of their infrastructure at Leigh Creek. They've got the railway. They're in basically in an old coal mine, so not too many problems from a permitting point of view. And I think they're pretty much ticked pretty much all the boxes in terms of permitting from the South Australian government. So we're watching with interest to see how they're progressing their financing and their stage 1 power plant. Really interesting company.
John, is there anything else you'd like to say to investors out there at this particular point in time?
Oh, look, we think that, in terms of the resources or the commodities market, the commodities in general peaked sort of pre and post the GFC, but they've come off substantially since then. Now, prices are definitely improved since the dark days of the mid 2010s, but compared to the equities market, which has taken off and probably tripled in the last decade. The commodities market is probably 30% of what it was. So, you know, there's about a 9 times differential between those two. Now, if you think that inflation is going to take hold, which looks like there's a reasonable chance it will, generally commodities perform very well. Hard assets perform very well in an inflationary environment. So we think there's a lot of fundamental positives for the resources sector. We've had a really good year this year in terms of money being supplied to the exploration sector, and we're at record spending on exploration here in Australia. But we think it could be just getting started.
Okay. Listen, I'd just like to take this opportunity. Your fund, it's got a ticker LRT on the ASX. So it is actually traded, like if you're trading through CommSec, NAB Trade, or through a full service broker, the stock code is LRT, if you'd like to buy or sell it. Excellent. Okay, John, thank you so much for your time today. I'm looking forward to watching the fund as always. And recommending you as an investment to our clients and to other investors. And thank you very much for your time.
Oh, Sean, always an absolute pleasure. And, looking forward to seeing you down here in Melbourne or myself up in Sydney very shortly.
Yeah, looking forward to it. Thanks, John.
Cheers, Sean.